Well, welcome back to Wealth Mavericks, the only show where we share with you the secrets the wealthy know and the government won't just tell you. I'm excited about our episode today. We're going to be talking about the misinformation in tax preparation and tax planning. There's a huge difference between tax preparation and tax planning, and a lot of people don't know that. They think the same person is doing all of that for them to be woefully frustrated.
Yes.
Then they realize it's not happening. If I had engaged you sooner, it literally would have saved me over $250,000.
Yeah.
Like it's like that. It's that simple. And so I'm excited to dive in deep with Bob and sharing with you some of the secrets that he knows that he's learned and uncovered. But before we dive in, Bob, how are you doing? How's everything right now?
Oh, Joe, I'm great. It's good to be back and excited for today's topic. And just busy this time of the year. It's all about tax planning time, and so extremely busy. And I know we'll probably dive into this a little bit more, but I'm great. How about yourself?
I couldn't be better. If I were any better, I'd have to be twins. It's so fun with our members. The work that I get to do extends so much further beyond just like taking care of their financial life.
Yeah.
It's a holistic nature of what we do. So looking at things from a spiritual, family, business, financial, fitness, and attitude, or emotions perspective. And as we're getting ready for the holiday season, and a lot of people, I've heard this so often, and Bob, I'm sure you've heard this too over your life, and anyone who's listening has probably either heard this or said this. It's like, I'm going to get in shape after the holidays, right? It's like, I'm going to make it through this season. And what I've told people is like, there's a lot more that you can do. Making smarter choices through the holiday season can have a radical impact post-holiday in whatever fitness journey you're working on. So that's kind of what I'm focused on right now with myself and with our members. We've got a push-up challenge going on. So anyone who wants to join, drop in the comments if you want to join the push-up challenge. It's really simple. 100 push-ups a day. That's all it is. But it's pretty cool, the effect of that. So
I'll start on Monday.
You'll start on Monday? All right. I love it. I'll take it. Awesome. Well, I'm excited about our topic today. This is an area that I think a lot of us need some guidance and information about. And I think there is a lot of misinformation about tax planning versus tax preparation. A lot of people think, they know the end of the year is coming up, meaning the end of the calendar year. December 31st is coming up. There's something that I need to do, maybe. So maybe talk with us, Bob, like right now. You said you're busy right now in tax planning, and I know there's different seasons throughout the year where you're focused on tax preparation versus tax planning. But tell me, like, when you're doing tax planning, what does that look like? What should people be thinking about?
Yeah. So I think, let's clarify exactly what you were saying is that there are two different types of tax actions, I guess, the preparing and then the planning. Historically, most people are experienced preparing, but you can't prepare for something unless you have actually planned for it, right? So I like to use the analogy of going on a trip, right? When usually you go on a trip, you plan for where are you going to stay, when are you going to fly out, when you're going to fly back, right? You rent a car, what kind of rent a car, how long, are you going to drive to the airport? Are you going to do long-term park, right? There's all these variables and going on a trip that you plan for. But many times we don't do that when it comes to taxes. And so this time of year, because of the fiscal year, meaning the calendar year, which are two different actual years for a business, fiscal and calendar, but most people focus on the calendar, and their CPAs and their current people usually set up their business as a calendar and fiscal year. So meaning, not to get too nerdy, 12/31 is the end of the year, calendar-wise, but also business-wise. So that means at the end of the year, 12/31, we take a snapshot, what's your profit, what's your loss, what's your net income, all these different variables, and that ends the year.
For both their business and like just happens to go along with the calendar too.
Exactly.
And why the snapshot? What happens in the snapshot?
So that's a great question, because what'll happen is that if you're doing tax preparation and your entity is, let's say, a pass-through, and I know we've talked about this in previous episodes, a pass-through entity, meaning that your net income, your profit or your loss from your business flows down to you as the individual business owner or partner of that entity. Why 1231 and why does that occur is because then January 1 starts an entirely new year. And what happens though is that a lot of people don't know that when their profit hits year end, it actually becomes now taxable income because it flows down to them individually, right? So there has to be a time period that the government says you owe taxes in this time period. Right? And so that's essentially what happens. And so in the planning process, you want to plan for that, but unfortunately what happens a lot of times is people don't plan, they procrastinate because the common conversation is, well, I don't know what my business will do until the end of the year. So I always ask the wife question, and what the wife question is that next question that should be asked is, so is your business and what's happening in your business this year any different than what it's happened in the previous years? And I'd say 80% of the time, Joe, the answer is no. It's pretty consistent. It's about the same. Then what's going to happen at the end of the year that's going to be a surprise from the previous years? If everything's pretty much the same, so shouldn't you be able to start planning in the beginning of the year? Use all 12 months, 365 days to plan to reduce that tax liability that you're going to incur that following year when you prepare your taxes. Does that make sense?
Have you found that people feel like, business owners that you've worked with, do they feel stressed at the end of the year? Like there's this big question or they don't know what's going on?
Yes. And here's why. This is because their fiscal or calendar year is at the end of the year. What also happens besides closing the books? Insurance renewals, right? So both business liability insurance usually renew. That's 1/1 is the number one renewal date of all business insurance. And then July 1 is the second, and then April, and then October. Those are the four.
And is that something they selected along the way and they just happened to select 1/1?
Or their broker ended up creating it? Because if you think about it, it makes sense for the insurance companies as well. Because they're getting their premium that they can account for the full 12 months as well. But your health insurance, right? With Obamacare, a lot of things shifted to where your health insurance renews to the first of the year. So you have your closing of your books, not only the month of December, the fourth quarter, and the year. You have your renewal of business insurance. You have your health insurance, right? And then you got to figure out pretty much, okay, what are we going to do next year? So you have your goal planning for 2024, the next year, right? So everything. And then, oh, by the way, we have Christmas and New Year's. And before that, we have Thanksgiving, right? So once you hit the week of Thanksgiving, you have basically, I'd say, 2 productive weeks.
Right.
In that 6-week period.
So most business owners, if that's the world that they've lived in, and I know we'll talk a little bit about this, but I talk about this a lot when I'm helping people understand what we do and all the work. There's a huge difference between tax preparation and tax planning, and a lot of people don't know that. They think the same person is doing all of that for them. To be woefully frustrated. That they realize it's not happening. So would you say that most people, that is their experience? It's like there's been, because using your analogy, right, you talked about it, planning a trip. Like if a trip is planned, whether you plan it or you hire a travel agent to do all this for you, the most enjoyable part is like, just show up. Like, I just show up. Execute. Like I get to just have fun. So like if you've planned properly, then that's an enjoyable experience. If you haven't, and if you're not like a super adventurous person, that's terribly frustrating and stressful to show up and go, oh, wait, where are we going? And what are we doing? So how many of the business owners, like when you first meet a business owner, or they become a new member. How many of them is this, like, on a scale from 1 to 10, this is like a 8 or a 9 level of stress at the end of the year, versus, like, if you've planned properly, what should that stress level be?
Yeah. Yeah. So it is 8 or higher
Hmm.
for the majority of business owners, because, you have your family that's planning the year end, right? You have do you do a year end event for your employees? So you're planning that, right? The end of the year is, from an 8 to 10 for most business owners, the most stressful period of time of the year.
Hmm.
And so when I look at all this, yes, we're talking about taxes, but I look at everything as a business owner first. And planning for a vacation does not mean that there's not going to be a hiccup
Or spontaneity.
or spontaneity,
Right.
right? But you get to actually allow yourself to think about that singular event rather than everything that has already, right?
Right.
So think about a business, and you're running a business. You have vendors, you have clients, you have employees, and then you as an owner have your family,
Mm-hmm.
right? There's 4 categories that you're dealing with all in the end of the year. And if your business is successful, or successful in the sense that at the end of the year, you have some sort of profit, now you're just going to end up paying taxes on that profit. And you don't necessarily have to, according to, according to a plan. And so what typically happens in tax prep. So let's talk about the 2 periods of time for tax preparation, and then we'll dive into why tax planning is not necessarily superior, but more calming for a
Right.
business owner first.
Mm-hmm.
That's the mindset. And then everything flows from me being a business owner, right? And the logic of what that means. So tax prep. Well, obviously, tax season, right, starts February 1. So businesses and everybody has January to be able to send out all the 1099s, all the W-2s, all these tax IRS documents indicating that there is cash flow flowing from different people, entities to individuals, entity to entity, so on and so forth, right? So then we gather up.
January is the month basically to take care of everything. Should be closed. It should be finalized, and you have this month to get everything out to the people it needs to go to.
Should be, but it doesn't always happen that way, depending on your complication of closing of your books and the partners and your entity structuring. So technically, businesses have till March 15th to close their books. That's the filing time.
Okay.
Right. So when you do bonuses, year-end bonuses for employees, you could actually date them for 12/31 because you're filing now. So that's what's happening in that first quarter, right? And your first quarter, you're also, what are you trying to do? Implement and execute your business plan, so you have a business that continues to sell and do whatever you do as a business.
Right.
Right. And that's after the coma of the holidays. Right.
Too much turkey, too much ham.
Yeah. So tax season for business owners, you file your business return March 15th, or you file an extension to September 15th. Right. Personally, it's April 15th, unless it falls on a weekend, and then they'll give you a little extended time. And if you file an extension, meaning I'm not ready to file my personal tax return, you get it to file it October 15th. Okay.
So personally is 1 month delayed behind business is March and September, and then personal is April and October.
Correct.
With the extensions and the deadlines.
Correct.
Okay.
Now here's the thing. The extension is a deadline date. You can file your return anytime up to that point. You don't have to wait.
You could file on February 1st.
Yeah. You could file your extension on July 13th.
Right.
Right. You have to file it. These are deadlines.
Why do businesses, and I've seen this a lot in the business world, it's kind of this default, we are just going to file an extension. It's almost like this foregone conclusion, we're filing an extension. Is there a reason why it would be beneficial to file on March 15th instead of extending?
That's a great question. For business owners, my philosophy, this is Bob Wolf as a business owner, looking at it from a tax perspective. And if you look at the business model of tax season, there are more individual taxpayers than businesses.
Mm-hmm.
Duh, right?
Right.
So if that's the case and there's more W-2 employees and you have the tax world, everybody filing their taxes in this period of time, why in the world, as a business owner, would you try to file your taxes in the same period of time when you can't get a hold of your CPA, you can't get a hold of your people, because you have questions about your business and you're trying to close up your business and take care of and do the final things of your business because you're closing the month of December, you're closing the fourth quarter of last year and last year books, plus what's happening in the year. Just doesn't make sense. So my philosophy is, as a business owner, let's file an extension. I'd rather file my taxes in May, June, when I have the full attention of my tax preparer.
Mm-hmm.
Right now, as our members come to us, we are their tax preparer. We're their tax planners and their tax preparers. So we have complete control over this process because we plan.
Right.
It's not. Here's the thing: everybody acts like taxes are a surprise. Okay, and it drives me bonkers that when April 15th comes around and it falls on a Saturday or even a Friday, what's the government do? Oh, you have till the next Monday. Why?
What did it matter?
What's it matter? We know when it's showing up. It happens. It's like New Year's. We know what's going to happen. It's not going to change.
Right.
But that's the process.
I think because the tax world is so foreign to so many people. And again, part of the reason why we have this podcast in the first place is to dispel some of these things and equip you with knowledge. And the application of knowledge is power, right? You know, if you learn how to apply these things. So I think a lot of people, this is just like this nebulous world of I don't know. And so taxes are a surprise. They're like, I have no idea how much I'm going to owe for my tax bill. Like I would be willing to bet a huge percentage of the listeners of this podcast couldn't tell you anywhere near like what they actually think they're going to owe. It's one of the biggest questions I had as a business owner is I'm like, you got to tell me what I'm going to owe. I got a plan for this. Mm-hmm. And it felt like such a hard number to extract. I'm like, why is this difficult to extract? Mm-hmm. So, you know, these are all plannable events. It's happening. I mean, if you do file an extension and you're as a business looking at September 15th, you're 9 months removed from the final date that year closed.
Right.
So and I had a friend who was a Green Beret for 23 years and I'd learned a lot of things from him. But one of the things that'll stick with me forever is he said in the teams, in the special forces, we always lived by like, it's better to have a plan and change it than not have a plan at all. Because I think a lot of people think like you can imagine in war, you're going into total unknown. You don't know what you're going to step into. But as he said, it's better to have a plan and change it than go in without a plan at all. So when you're looking at the planning side of things, what's the planning season? We know the preparation season. Yeah. What's the planning season?
So typically when you're working with a CPA or a traditional tax planner, because the world knows that the end of the year is when my business is going to show profit or we'll have a better, clear indication of what that's going to look like. Everybody waits till fourth quarter. Well, and you know what most humans do? They procrastinate. So they wait till December. Well, what's happening in December? Everything I already expressed.
Right.
So no wonder people hate taxes because now all of a sudden it's being jammed into everything else that is supposed to be the happiest time, joyful time of the year. Right. I mean, it's insane. And I actually think business owners now after Halloween, Christmas stuff starts going up. I think there's PTSD for business owners when Christmas stuff starts going up.
Right.
And I'm not being funny. I'm being honest.
Like your blood pressure's going up, your stress levels going up. Right.
It's like, oh crap, it's here. Right. And so tax planning, that's traditional. Now, what we do and what I recommend all year long, you should have a plan all year long. If there's a hiccup or there's spontaneity to the point you made
Mm-hmm.
earlier, then we address that singular type of event.
Hmm.
But we already have a plan laid out of what we're going to do. Now,
Right.
well, what happens if my business isn't as profitable as it was? Well, then we'll adjust the plan.
Mm-hmm.
No, plans they're not fixated and written in stone, right?
Mm-hmm.
I always make the joke that, even Moses had to go for a revision.
Even when it was written in stone.
It was written in stone, right? Because he saw what was happening. He threw them down. They broke. He had to go back up, and probably sheepishly, we don't hear the words, but sheepishly,
Right.
it's probably like, God,
I messed up.
yeah, I messed up. And you saw what I did, and I allowed my emotions to get a hold. How many business owners are like that, where our emotions take control over the plan and what we're doing? And that's what we try to do with the coaching that we provide for business owners from a mindset perspective. The push-up challenge, like you said, the 100 push-ups a day challenge, right? What we're trying to do is retrain our brain to do things that is more logical, that creates those happy, joyful emotions that we want. But what's happening is we're being reactive. And when you're reactive, it's always chaotic, which is what the devil's tool is, right? It's create chaos, confusion. But with a plan, you have more peace, more calmness, you're happier. And guess what? People want to be around you, and you want to be around people.
Right.
So
and it's doable. I mean,
absolutely.
I was talking with someone the other day about what we do, and this is a sales expert, and he was just really curious. I've never heard of this kind of thing before, so how does this work? And what he said at the end of the call, he said, what you guys really do is you help businesses create peaceful wealth. He's like, you guys should actually buy that website, coin that term. It's like, and it's really true. So it's like, especially going into the season where there is supposed to be this joy and happiness, yet we feel this tension of stress and anxiety and all of that. So what does planning even look like? When you say, we're planning all year, like what's an example of that?
Yeah. And here's the funny thing, and I'll answer that question here in a second, is that because of exactly what you said, is why we as business owners constantly, I mean, if we got a penny for every time we heard this, Joe, we would be,
we'd have a few dollars,
right? We'd have, what was it? Peaceful
wealth. Yeah.
Right? I feel like I should have more than what I have.
Yeah.
Right? I feel like I should be doing better than I am. And that is the point. That's what chaos, that's what being reactive does. It creates that. So you can't enjoy your hard work. You can't sit there. My business coach always tells me this, and he says, okay, Bob, time out. Let's just enjoy the success you just explained to me that happened. No matter what the size of it was, he always says, time out. Great job. Let's just sit here and enjoy that for 30 seconds. All right, let's move on. Right. And boy, wouldn't that be wonderful if we always had that little angel on our shoulder saying, okay, time out. Let's show a little gratitude for 30 seconds.
That is super common for like type A driven, high D personalities, which typically are the ones who are risk takers and start businesses.
Yes.
Like that describes the vast majority of business owners. And we have a tendency to just skip right over any accomplishments because we're looking at the next thing. We're driven. We're looking at the next mountain that we're climbing. And that act of actually pausing and doing that is such, like, I'd encourage people to pause this recording right now and just take a mental note of what have you accomplished this year so far? Like look back 12 months ago. Where were you then? Where are you now? What did you learn over the last 12 months? And just take a deep breath in and appreciate where you've come. That's a great reminder.
Yeah. It's, and this is an American thing, right? This is our culture, right? You talk to other cultures, you go to other places around the world. They don't do this. We do. And it's what the Republic was started on, right? People wanting something better, different than what they were at, and that strive for excellence and peace and freedom. And so anyways, that's probably a different episode.
That's a whole other episode.
So stay tuned for the next episode.
That's right.
So your question was, what does the tax planning process look like?
Yeah. Like, what does it even mean? What does it mean to have a tax plan?
So basically like any other plan, is that you've laid out what we want to know. What do you want to accomplish? Right? We want to know, what do we have to do and what do we want to do? And dissecting the difference between the two. Right? Because as your point, the type A personalities are going to, everything is a have to. Time out. Some of that is a want to. Right? So it's okay to shift it from a have to a want to, and the plan will show you how to get it from a want to a have to. Let the plan and the execute of the plan take that weight off of your shoulders, not you carrying that with you the entire time. Right? Well, it's kind of like almost like backpacking, right? You go on hikes a lot. Imagine you didn't have a backpack. You just carried everything.
Right. Right.
That's what we're doing as business owners. We're just carrying everything, right?
Like balancing something on my shoulder while
right. How crazy would that look? But we use a backpack. That's a plan. Yeah. The backpack is a plan for this journey. And for a business owner, a plan for taxes, which incorporates everything the business owner is doing to generate wealth.
Right.
So you were going to say
okay.
something.
Yeah, so I'll make a statement, and then I've got a really specific question that I think would be helpful. So without a plan, we kind of we're flying by the seat of our pants, meaning like how much, and I know this is the experience for so many business owners. Our profitability this month was here, so I took my W-2 income already, and I'm just going to take this draw, right? Or I'm going to take an owner's draw or an owner's what's the terms?
Distribution.
Distribution. So I'm either going to take a distribution or an owner's draw, which maybe we'll have an episode talking about the distinction between those. But taking a distribution, it's like not planned. It's not forecastable because we just had a great month or we had a great quarter. So this is kind of living without a plan. It's just like we don't know where it's going to come from.
Yeah.
Part of that has to do with the stability of your business and the predictability of your business, which is part of the reason why we have, the executive coaching that we provide as well. But when someone is getting to the end of the year and they're like, well, my job is to reinvest in my business. We had $300,000 revenue this year. I've got an extra 20 grand. I'm going to pour it back in. I'm going to buy more equipment. I'm going to hire somebody, whatever it might be, but it's without a plan. What you're suggesting is going into things knowing, hey, when we get here, we're going to do this. When we get here, we're going to do this, and having a plan for that from a tax, maximizing the benefits that the U.S. tax code provides.
Yes. And here's the other thing is that a business owner is going to say, I'm going to take my profit and reinvest in my business. The IRS says, yeah, after you pay me.
Right.
Right. Because when 1231 happens, even though my mentality is that 300,000 profit is going to be put back into my business in 2024, it has to pass through the tax man's 24, 35%, whatever the tax man's, your personal tax rate is at. Because you didn't close your books and you didn't take that profit out and you didn't plan appropriately. We don't know that happens because it's sitting in our business account. And then when we file our taxes and we pay our taxes in October of the next year, 10 and a half months later, we don't know what just happened because there's no plan. You're losing up to 30% of your value of your dollars. And so when you reinvest in your business, we're not thinking about, I got to get at least 30% back to break even and then make more. No, we're like, oh, my business grows by 15% a year.
Right.
But how many steps did you take back to take one step forward?
Right. Yeah. Because you already did the hard work of bringing the revenue in, right? The revenue is already in. So now how do you maximize that? And again, utilizing the IRS as your friend, as your partner. Like they want you to make smart decisions. They're just not going to come along and make them for you. No. That's not their job.
Yeah. And they can't. They can't. They can, there's 180 million taxpayers.
Right. They can't do it. Like it's not. And again, this is a mindset shift of saying the IRS is the enemy versus the IRS is my partner. Correct. We want people to understand, like you can utilize them as a partner. They're a phenomenal partner. They're one of the best partners you can imagine.
Absolutely.
If you know how to use it. And if you don't, they will be your enemy. Yeah. And by the way, they will come after you as the enemy.
Yeah.
So it's really interesting. And I think One of the questions, and I got this question literally yesterday morning. I was talking to a guy who's got a phenomenal business. I mean, he is ready to explode. Like he's got multiple multi-million-dollar deals in the works, but
Awesome.
right now he's like living like a pauper, right?
Yes.
It's ramen and rice,
Yeah,
to get through this time. And the question he asked me is like, so Joe, when is the right time to hire you guys? Like when would be the right time? So I'd be curious from your perspective, Bob, like looking at someone who's just kind of they're bootstrapping their way through this. They haven't taken on loans. They haven't taken on, money. They're just working their tail off. They're nose to the grindstone. What's the right time for someone like that to engage with a tax planning along with, tax prep company like what we do?
My answer is immediately. And the reason being, it goes back to your mindset of the people wait till the end of the holidays to start eating better and exercise. Well, what if I had a plan before that and I actually didn't have the second magic bar, or I didn't have the 3 hot chocolates, I didn't have the 8 eggnog drinks, right? Right. Not that that's not personal experiences, by the way. No judgment.
Those are really specific numbers.
I mean, turkeys have 2 legs and someone's got to eat them.
They're not going to eat themselves.
Right. I mean, come on. So I've heard. Same thing with taxes and building a business, right? Because there is, again, it's the whole point of a plan. It's the whole point of a plan is if you want to be spontaneous and you want the excitement of chaos, then just show up to the airport and buy the ticket that shows up at the time on your watch that you want to fly out, wherever it goes, whatever the cost, right? But if you planned for that same trip, and you planned for it 2 months ago, that ticket is going to be a lot less money. And you actually may get the ticket. Right. So that's the cost of spontaneity, chaos, and plan. You could still accomplish both. One's going to cost you more than the other.
What would you say is like the minimum? Like, let's say a company is not going to show a profit for the year. What's the value of tax planning if they're not going to be in a profitable position, or is there a benefit to planning?
Yeah. So there's so many, and I hate to say this, it seems like almost a cop out in answering that question. There's so many variables to answer that, because let's use Amazon as example. Amazon is a public company. And for the first 20 years of being a public company, they showed no profit. Right. Would you not work with them?
I would.
And so did everybody else. Right. They didn't start actually showing a profit till all the investors finally said, I want dividends. I want money. Right. But what happened to the value of Amazon, even though they accounting wise did not show profit? Right. The value of the business kept going up. That is a criteria. Okay, you may not be a profitable business. You may have just started, but what's the value of the business? What if you hired us? We start looking at your business and say, hey, you know what? This is a great model, but what if we just made this little tweak over here? We focus on this KPI over here. And what difference would that make to the value of your business? Still not profitable, but the value of your business changes.
Well, and even some of the basic fundamentals, like things that we look at as very routine, like bookkeeping properly, like keeping proper books. Like maybe somebody is not realizing a profit, and there are areas like honestly, like how many business owners really, I'm thinking of this specifically, like the bootstrapping, nose to the grindstone kind of business owner who's maybe got $300,000 to $500,000 total revenue for the year. And they're kind of eking out a living based on what they're doing. But how many of them are actually studying their financials? How many of them know how to look at a P&L or a balance sheet or any of those financial documents? And if they don't know how to read those, they don't know the story that's unfolding in front of them. And so some of those things, like from a planning perspective, we can look at and say, hey, there's alarm bells going off over here. Are you paying attention to that? So I think, as I think through, like, when is the right moment for someone to engage with, a company like who we are and tax planning and tax preparation, I would tell people like
now.
It's now. It's not even like when it becomes affordable. It's you've got to make sure the dollars and cents add up.
Because you may not ever get to affordability, and that's the opportunity cost of business.
Right.
right? You don't know the outcome of your decisions until you make the decision and you do it.
Right.
And we know we made bad decisions after the outcome has already turned out to be bad. And you sit back and go, oh, I should have done that.
Yeah. How
That
much did
actually
that
may have
cost
been
me?
worse. That could have
Right.
been worse, right?
Well, and that was when I worked in the philanthropic giving space. We would receive gifts, assets that, prior to somebody selling their company, they would say something like, "Oh, when I sell my company, I'd like to give 10% of, my net, to charity or to the church or whatever it might be." And if they did that before there was a sale in the works, they can actually give companies stock, and that 10% would have the equivalent impact of like 15 or 18%.
Correct.
You know what I mean? It didn't cost them any more dollar wise, but the impact of that. So it's the same thing with this. Like, when somebody closes out the year, I mean, I'm thinking back to a conversation you and I had, and it was, if I had engaged you sooner, it literally would have saved me over $250,000.
Yeah.
Like it's like that. It's that simple. So I would encourage anyone who's thinking about this right now, especially at this season, like if you haven't done tax planning, if your whole focus has always been with your CPA focusing on tax preparation, like you've got to exit that mode. You've got to get into a planning mode and take control of everything that you're doing.
Yeah.
So.
And I would probably say, what are some triggers, right? Because some people may listen to this in February of next year. Right? Mm-hmm. What are some triggers that that maybe your CPA is not a tax planner and is a tax preparer?
Yeah, what does that look like?
So let's talk about a couple of those. All right. You need to buy more equipment or buy a new company vehicle.
This is what they say.
This is what a CPA will typically say, or a tax preparer will typically say. So let's look at the numbers of that. Okay. So let's say I have $100,000 and I go spend $100,000. Well, what's that $100,000 going to do? If I'm in a 30% tax bracket, it's going to save me 30 grand. So I just threw away 70 grand to save 30.
Right.
Right.
If you're throwing it away, like if it's just.
Now, if you need the equipment, if you need the vehicle, absolutely go do it. This is a great opportunity to take advantage of that, especially as certain laws adjust and change based on depreciations and all this other accounting gobbledygook I won't go into. But you need to maximize your retirement account. Okay, what's that mean? And where am I going to put my money? Do I have access to it? Right. And to maximize your retirement account, typically 9 times out of 10, as a business owner, if you have employees, you have to crank up your own W-2 taxable income to put money aside that helps you save money on taxes. But the opposite just occurred. I just increased my taxes to put money aside because of the top heavy rules and retirement rules based on employees and employers and all that kind of stuff. So there's rules associated with that. But those are the two most common things. If you don't own a house, they'll say go buy a house because you can deduct the interest on your mortgage interest. Okay, I'm going to go to 300,000, 500,000 in debt to buy a house that now I can deduct the interest. But it's a amortization schedule. So every month my interest decreases. So every year my tax savings decreases. What happens to our income a lot of times due to inflation? Increases. So we have this tax gap that occurs just based on the design of the cash flow and the numbers. That's not counting that money has to come out of my business to my personal checking account, passes the tax man's hand, so I can pay for it. Right. That tax deduction.
Right.
Right. So these are things we look at. We get into the numbers. We look at it. We look at this misconception of tax planning. I gave you 3 triggers that all increase your taxes.
Right.
But that is normal tax preparation, tax planning, air quotes.
Like that's the extent of the planning is like what most people would look at as like low-hanging fruit. And again, for many people, this is not a bad idea. If you're a W-2 earner, you're whatever it might be. But as a business owner, and this is the thing that you have taught me and so many other people, it's like utilizing the entirety of the U.S. tax code to your advantage as a partner. There are just smarter ways to go about building this. And I love the tagline that we use often is helping people build their wealth, not just their business. It's very possible. And the end of the year, we definitely recognize this, or most of us do. We kind of pull our head up from having our nose to the grindstone, and we just take an assessment. This is why like New Year's resolutions and those things are very popular, is we kind of take a moment and reflect and go, where have I gotten to? Where do I still want to go? And so in that moment of pausing and reflecting, I think it's important to assess, like, am I really maximizing the things that are at my disposal, or am I just going through the motions again?
Mm-hmm.
So it's easy to build your business, but miss out on really building wealth along the way.
And it's easy not to have a plan. It's expensive.
Right.
It's expensive.
But it's easy. Yeah, it's easier.
But it's easy, right?
Yeah.
So everything we're sharing does not mean that what we're doing is better than what you're doing. What we're sharing is that it's more methodical, and there's a value to what you're doing. It's not easy changing. It's not. We have to build new habits. And like Ryan Holiday talks about when he talks about the Stoics in his book, The Obstacle is the Way. Yeah, go to the obstacle, right? David Goggins talks about this as well. He's like, I don't like running, but I do it because I don't like it.
Right. That mindset.
Right. Do I want to succumb to my feelings and my emotions because there's a cost associated with that? Right. And that is, you can't make these changes without coaching and help. You just can't. It's very, very difficult unless you have such a mind shift like David Goggins or somebody like that, who's a unicorn, is an outlier that now is out there helping us to follow in a pathway, maybe not to the same extreme, but to a certain benefit to ourselves.
Right.
So,
well, and I'd love for everyone to imagine, like to imagine 12 months from now, where you're going into Q4, ending Q4 of 2024. And instead of anxiety and chaos and like we're buying the ticket last minute, and expensive and all of that, imagine going into that season completely at peace, knowing that you've maximized everything you possibly can from a planning and tax perspective. That's a very different mindset. And I'm just telling you, that's possible. Like, you can do that. So here's my final question for you on this episode, right, Bob. If there is one piece of advice that you could give to just your average listener who's listening to this, they're not engaged with Terra Firma, they're not engaged with us, they're not going to, like, what's one thing that they could do that you think would inch them closer to that peaceful wealth rather than chaos?
It sounds a little bit cliche, but I would sit down with yourself first and write down what you want to happen in this next year. I'm not even talking about from a tax perspective. I'm just, what do you want to happen? You can label personal, you can label business. And what do you want to happen? Then on the business side, I would sit down with your executive team, have them do the same thing, and then you collectively do it. Then on a personal side, you sit down you have your wife or your spouse, your significant other, do the same thing, and then you collectively do it. And then with your children, if you have children, and so on and so forth. Now, I say children, I mean any age.
Right.
Any age, right? The younger they are, the more outlandish their wants are going to be, which is, I think, refreshing for us. It's a reminder that beautiful. We can dream.
Yes.
Right?
I love that.
So I think that's something that, and then from there, you can dictate the number side, the finance side, the business side, to what that stuff looks like to accomplish those. You have to know, like what Simon Sinek says, your why. Why are you doing this? And if you're not getting up and in the morning, in the middle of the year, to do what you need to do to get that why, that's not your why.
Right.
That's not it. Your why has to be whatever it's going to drag you out. If your legs all of a sudden went numb and you can't walk to the car, you're crawling to the car. Well, you can't drive, so you're crawling to the office, right? What is that why that will cause you to do that?
Right. That's such a good reminder for people. It's, it's the more holistic version of what we've just been talking about, reaction versus planning, being intentional about your year, being intentional about what you're looking to do. I heard someone talking about this literally last night. Who was it? It was somebody that everyone would recognize. I just can't remember their name. It was like big name. And what they said is, I felt like if I can dream it, or if I can see it, I can accomplish it. It's like that was all it was. Like, if I can see it clearly, I can therefore accomplish. Oh, it was Arnold Schwarzenegger. That's who it was. I was watching that documentary on him. Yeah. And he said, I felt like if I can see it in my mind, I can achieve it. He's like, this is not about a dream. This is not about dreaming. No, this is about a vision.
Yeah.
Vision, this is about me having vision. Yes. Vision. It's create a plan. Yes. Execute the plan. Yes. I think that's a great reminder.
Yeah. Yeah. And I think a lot of people have dreams that can be visualized, but we always talk about being dreamers and what's your dream and all this kind of stuff. But that's also probably for another episode.
Yeah. Maybe that's some of our extended content that yes. we'll hang around and talk about. Well, it's been a ton of fun. Thank you for sharing your wisdom in this episode, Bob. I'm looking forward to it. Make sure to join us on our next episode, where we're going to talk about the roles and the guidelines of the financial distributors. So what we're talking about are the banks, investment companies, and insurance companies, and how they actually work. And so we'll be talking about that. If you want to join the conversation, if you want to be a part of this, join us on our LinkedIn page or our Facebook page. Leave a comment. Let us know what you thought. And more importantly, what questions you have. Are there specific questions that you'd love for Bob to address? Put them in the comments. We pay attention to these things, and our team can look at it and get us that information. So until next time, I was going to say, stay classy, San Diego. Neither of us are in San Diego. I will be next week, though. All right, we'll talk to you all next time.
Bye.